Kadena is certainly one of the favorites on this channel, but people keep asking me in the comments, what's your projections for Kadena in the bull market high? It's always difficult when you're launching the bear market. You've got no previous technicals to go by, but there's one little method that we can use to try and get those projections. Let's dive right in. And this is going to be a valuable one. It's going to be top-down analysis. We're going to start off on the daily time frame, and this time we're going to work our way up onto the weekly time frame. And I'm going to show you why it's important to start off on the daily, because we're looking for a catalyst in the market. There's a few things that's happening in the crypto market that's telling us we're about to start a new bull run. If we know we're about to start a new bull run, we need the best entries possible, and that's why it's good to start on the daily. So we said that we had an impending death cross. We've been tracking this death cross before it happened, days before it happened. We said the damage has already been done here. We've reacted at the 61.8% retracement. That's positive. We've got a bullish divergence here where we're creating a series of lower lows, lower lows, lower highs on price action. We're creating a series of higher lows, higher highs, higher lows, higher highs on the RSI. That's showing us that the buyers are buying, but it's not reflected on the charts. So that's showing us it could be an early indication that we're going to get a nice bullish candle on Kadena. We need to take back this 200 daily moving average, and then we can turn bullish from there. So that's going to be my first indication. This bullish divergence, we need it to play out. We need price action to get above the 200 daily moving average for us to keep moving to the upside. Right, so that's in the short term. That's what we need to happen in the short term. What I want to do is zoom out in the weekly. You lot keep asking me, what's my projections and how can we do projections for Kadena in the bull market? I'm going to show you. But before we do that, I said it's going to be top-down analysis. I just want to show you these gaps. So if Kadena drops this current support now, we're creating a bit of a head and shoulders pattern here, sort of a head and shoulders, not really a head and shoulders because this neckline is being broken once, but we're creating a little bit of a head and shoulders here where we've put a bottom in, creating here a higher low here, we're creating a higher high here, and then we need this to continue to the upside. Before that happens, I want to show you these gaps. If worst case scenario happened, we drop this level of support, we've got our next level of support, which is the bear market low support. That bear market low support is sitting between 43 cents to the bottom side and 50 cents to the top side. Now I want to show you these gaps. From its bear market low to this little gap here, that is a range of 95%. That's nearly a 2x. And then from where price action is currently sat to the next resistance level, that's a gap of 68%. And then we can rinse and repeat this. These are all the gaps. Why are these gaps? Because there's a lack of buildup of price action in these areas. Then you've got a big acceleration here. You've got a huge gap here. So we can look at these and we can analyze. You've got a 56% move to the upside there. You've got a 60% move to the upside there. That's your short-term projections. That's just to where price has already been in the last couple of years on Kadena. So these are easy wins. Once you hold support, you can ladder in a position. You can take off part of your position at the resistance. And when you do that, it helps accumulate. Next time you fail a resistance level and come back, it helps you buy support with all that additional allocation of capital that you've managed to generate by coming out of resistance. So it's not about shooting for the moon all the time. You can use these for quick gains to build your US dollar or USDT. You can use these for quick gains, in, out 95%, in, out 68%, in, out 56%. It's as easy as that. And just an example, how many times would this have happened from where price is sitting here? You've dropped this resistance, come support, we've come back down, tested resistance again. That's a 68% move to the upside. We've come down, we've dropped this level. That's a 95% move to the upside. There's another 68% move to the upside. We've come back down, hit support. There's another 68%, and there's a 56%. So look at all those trades that could have happened. 5% of your capital, and you can turn that 5% into 10%, into 15% if you use it wisely. Make sure that you've got a strategy in play. And we'll talk about strategies very shortly going forward. We'll talk about the IPDE method in tomorrow's video. So that's identify, predict, decide, and execute. So I'm going to be doing a big video on Gleave tomorrow. So check that out, guys. I'll leave a link in the description below. Right, okay, so how can we project bull market highs once we haven't previously been in a bull market? I'm going to show you because you know that I'm all about Fibonacci, and that's exactly what we're going to do on this one. So you get a Fibonacci extension tool. You're going all the way from its bear market low, all the way to its launch high, and then you're pulling it back down all the way back to its bear market low. And then we're looking for certain levels. These are projections where price action has never stuck before. So you've got your 1272 and your 1618. They're going to be the first projections, and we'll build them in. And let's see from where price is currently sitting now to where the 1272 and where the 168 lie. So you've got your 168 sat up here, $15.40. You've got your 1272 sat up here, $12.19. From where price action is currently sitting, all the way down here, from where price action is currently sitting, that is a move. Where are we down here? That's 1,667%. 1,667%. So like I say, guys, this one's higher risk. Use it as a top up for your portfolio. Use it for those quick wins where you're in, out at support and resistance, and build that into your strategy. So if you did find it useful, guys, let me know exactly what you want me to cover in the next video. The altcoin market is heating up now. We're starting to get signs that we've got alt season. Let me just show you this actually. We're starting to see signs that we've got alt season. This is the thing that we've been looking for, and this is the thing that we've been looking at. This has been going on since February 2022, and this is an ascending channel. Once you've got an ascending channel and you break to the downside, you tend to get an acceleration. Ascending channel is a bearish move. So this is the Bitcoin dominance. We want the Bitcoin dominance to drop. Once this Bitcoin dominance drops, then you'll start to see signs of alt season. And you can see for the first time it has dropped. We've come back. We're retesting it now. Today's going to be an important day because if we reject this, that could start the acceleration. So let me know in the comments what you want me to cover next. Subscribe to my channel and I'll see you in the next one.